10-year note yields start the week off nudging lower today, closing at around 410, slightly lower from Friday's close and what was a lackluster trade and only about a 6 basis point range, seeing a range of 407 up to 413. Recall last week on Friday we saw yields get almost up as high as 420 before reversing lower in the afternoon. Again, seeing that continue slightly today as we were modestly lower at around 410 in the afternoon, down slightly from Friday's close. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com, and you'll notice that today, despite the fact that yields were slightly lower, we did see volatility marking slightly higher. Not huge higher, but again, as yields move lower historically, volatility does as well. We didn't see that today as yields were down today. We saw volatility firming, likely ahead of some of the key data we have later this week, as well as FOMC next week. Last, let's talk about what we have tomorrow. Tomorrow is Tuesday. We get the Philly Fed non-manufacturing index. We also get the Richmond Fed, and we get the beginning of several auctions via a $60 billion two-year auction. Later this week, however, we get key data points. We get fourth quarter GDP and the PCE data, which the Fed will obviously be closely watching ahead of next week's January FOMC. So starting off the week, 10-year note yields continue what they did late last week, and that's nudging lower, closing at 410 ahead of tomorrow's Philly Fed non-manufacturing, Richmond Fed, and a two-year note auction.